Hello everyone, welcome to this week's end of week live stream. It's been a really interesting couple of days, I think. This is the S&P. We'll get into the details in a bit, but we had that interest rate decision from the US on Wednesday night, and we've seen, compared to some of the recent volatility, some quite big volatility from markets over the last couple of days or so. So I think it's definitely a much more interesting time than we've had for a few weeks, and it could make for some potential trades next week. But we'll get into all of that in a second. Let's, as usual, do the risk warning just to explain how these work. If you've never attended them before, there's a few new subscribers this week. We take a look at the major announcements for next week. I pick out what I think are the big ones. We'll take a look at the major markets, indices, major FX, all of that, gold, oil. And then I'll go into the questions and look at any stuff you want looking at. Let's do a risk warning though. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences as a result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay. This is probably the last live stream for me this year. I mean, in a week's time, it's going to be the 23rd of December. There doesn't seem to be much point in doing a live stream then. So this is probably going to be the last one. If something kicks off early next week, then I'll do one on Wednesday. But I think this might be the last one. But thanks for coming along. Thanks for the support this year. And obviously they'll start again in the first week of January. But looking ahead to next week, Tuesday. I mean, we've had a lot this week. We've had US interest rate, UK interest rate, European, EU interest rates. On Tuesday, we got the Japanese interest rate decision. I think it's about 3 o'clock in the morning, my time, UK time. So there could be some volatility there. And on Thursday, there's US GDP. So for me, those are the big announcements next week. So let's see what happens. But you know, we might see. It's an odd time of year, obviously. You know, you'd expect volumes to start dropping off next week, but with volumes dropping off, we can still get plenty of volatility on thinner volumes. Plus, we've had a pretty volatile couple of days. So for me, I will probably still be looking for trades Monday, Tuesday of next week, see if there are any opportunities, and then probably not much after that. But we'll see. We'll see what it brings. Quick word from the sponsor, as usual, me, the trading course. I run a trading course. I've run it for about 1.5 years now. There's a medium-term trading approach, which I've used for about 4 years. You can see that the performance, the longer term performance on my website, trading over weeks and months. There's 11 video lessons there. I included in the course cost, the shorter term trading course that I added in November of this year. That's trading, holding positions for hours and days. Typically, the trades don't last much longer than 3 days. There are 7 video lessons there, and as part of the course fee, there are 4 live webinars. So for those of you who are on the course, the next live webinar with me will be the first Thursday in January is the next one that we're doing. As usual, here's an update on the P&L. This is the same update I gave on Wednesday in the live stream. I haven't done any trades since Wednesday, or any closed trades since Wednesday. I am short the dollar index from this morning, but this is the short-term trading approach. As a quick explanation, when I started writing the course in October, I decided to trade a £4,000 account as part of the course to show how the trade stacked up and all of that. You'll see them within the course. I've continued to trade this. I'm going to trade it for another month with £4,000 and then up it to my normal level of risk. But this is the performance over the last 30 days up to the 13th of December. So realised profit, £586, which is a pretty good return on a £4,000 account over a month. That's the profit there. The 90-day view, this is where I started trading it back here-ish when I started putting the course together. So the 90-day performance is like that. So just under £1,100. So what's that? 25% return on £4,000 account, something like that. And I chose £4,000 because for me, if you've watched any of the stuff I've done in the past, I think risk management is really important. So for me, £4,000 means every trade I risk losing £100, 2.5% of the account. So the profit over the last 90 days is just under £1,100. About 57% of trades were profitable, which for me sits in with my longer term average. That's what I would expect. If I look at the last 30 days, 65% of trades have been profitable, which I think for me, with my approach, is unrealistic. So for me, 57 to 60 is a sensible thing to aim for. And that's the P&L. So it's performed much better than I thought. The approach I use is exactly the approach I talk about on the course. In the short-term trading course, there are 4 different setups I use. I use 1 or 2 more than the other, 1 or 2. But it's trading the approach based on the course. So to find out more, go to my website. I know it's an expensive time of year for a lot of us. So I'm doing a discount. I'm doing a discount to the end of this year. So 31st of December, if you put the code YouTube into the order form, you get 20% off, and that's valid till the 31st of December. And like I said on Wednesday, I am putting the price up again in January by about £250. So go to the website, jonesthemarkets.com, to read a bit more about it and look at some of the numbers. Any questions? If you think, well, is this for me? All this sort of stuff, drop me an email, dj@davidjonestrading.com. I do think it's the best trading course out there because I don't sit there and sell the dream and tell you you're going to treble your account in a month and pictures sitting underneath a palm tree on a desert island, but I do show that it is possible to be consistently profitable. And let's not forget, 75% plus of people lose when it comes to trading. The advice I always give to somebody in the real world, if they ask me, I want to start trading, what should I do? The advice I always give is don't start, because the odds are stacked against you. Yeah, you shouldn't trade. Most people should absolutely not be trading. But if you've just started trading and you're struggling, or if you've been trading for a while and you're struggling, then I think it's the perfect course for you, and it's done by me. So there are details there. Go out and find a bit more about it. The link is in the description to this video. Right, let's get into it. I think it has been a really interesting couple of days. I was perhaps bemoaning this time last week and again on Wednesday how flat markets had been for about a month, I think, 3 weeks, awaiting this Fed decision on Wednesday. And we had it, and we continue to see lots of volatility. They raised rates by 0.5% as expected. But I think they did say that they're going to have to do a lot more to battle inflation. And I think that's maybe unsettled markets. We saw, the move on the S&P, if we flip it over to an hourly chart. So going into the number Wednesday, it was mildly positive. We did, when we did the live stream on Wednesday, someone said to me, what would you do for a coin flip trade ahead of the interest rate decision? What would you do? And we were looking at the Nasdaq, and I think it was at 11.8 is what it is. I said I'd buy it at 11.8, and it did run a bit higher. It ran about 140 points higher. But look, you can see this is where the announcement comes out, bang, and I did wonder, all right, has the market overreacted? But if you look at yesterday's trade, and even today, pre-market trading, obviously the market's opened in the last 10 minutes, markets have really been knocked by this. But let's go back to the S&P. I think today, I'm going to try and focus perhaps more on the longer term views, because I won't be doing a live stream until January. We shouldn't be too surprised by what the S&P has done. I talked about this downtrend for a lot this year. We saw the move on Tuesday on those inflation numbers that came out, whacked the market up briefly pre-market, and here we are, bang, we're back now trading at its lowest for about a month for the S&P, slightly more than a month, maybe 5 weeks, the trend is still down in the S&P 500. You know, we've broken the lows over the last month or so. So it's all playing out in lockstep with the long-term trends. So for me, what would I be doing now? I'd be looking to sell rallies in the S&P and in the Nasdaq. We'll take a look at the Nasdaq in a minute. Looking to sell rallies. And the interesting thing will be, and I don't think we're going to see it until the new year, what happens if the market, if I employ my my art skills, if the market trades down to here, do we see the buyers come back in? Do we see the market try and make a base? Or actually, in January, do we see the S&P go on to make new lows for this down move? So I think it's really interesting. Few weeks ahead. But for now, for me, you know, we've seen the market's quite shocked by what's happened this week. So let's see what happens over the next couple of weeks. But for me, absolutely a seller of strength. Today would be interesting to see what happens. Let's just flip over to the hourlies quickly. I mean, what was yesterday's high? What's happened here? Why is that flipped off? There we go. What was yesterday's high? Yesterday's high was about here somewhere. Let's say 39.50. You know, the market's almost 100 points below it. Even if we had a really strong rally today, I'd absolutely be looking to be a seller into strength. You know, we've broken some big levels. So I think an interesting day, but a really weak couple of days for the S&P. If we take a look at the Nasdaq, same old on the Nasdaq, almost textbook on the Nasdaq on Tuesday, runs up to its trend line, traded up to 12,250, and here we are on Friday, almost 1,000 points lower. 950 points lower than that high we saw on Tuesday, breaking some support. So again, for me in the Nasdaq, in the new year, it will be interesting to see if this market comes under more pressure. How does it perform around the October and November lows? Let's see what happens. But that trend is still down in the Nasdaq. If we flipped it to an hourly, you know, again for me, we would need, you know, even a rally, a 200-point rally from where we are now, up to 11.5, you know, looks like a good short to me today. Let's see what happens as the day goes on. Now the DAX, I wonder if the DAX looks a bit more interesting now. So we'll bring things over back to Europe. Yes, it does. So for me, you know, I've said the last few weeks, the move that we've seen in the DAX over the last, since the end of September, does look like this downtrend is over. And I was saying it's all been, you know, since mid-November, it's all been a bit boring. What we need in the DAX is a half decent sell-off, and we're getting it. So I think, for me, the DAX, if I was looking to buy a dip in stock markets, the DAX perhaps looked like the interesting market next week. Because for me, I'm going to take the view, right, this recovery from October is still intact. If the DAX gets knocked back to maybe 13.6 or thereabouts, and we see some strength come in, then for me, that looks like a buy. So I think that is, for a change for me, the more interesting market to watch next week, the DAX. Where does this weakness stop in the DAX? If we made it a 4-hour chart, it looks something like that. So from, you know, 13.5 to 13, I don't know, let's call it 13.8, that whole area there, will we see a bit of strength come in for the DAX? Let's see what happens next week on that one. But that is definitely a market to watch. FTSE, I always say I never look at the FTSE, I don't care about the FTSE, but what's the FTSE done? It's sold off. You know, I've said, you know, the FTSE's been sideways for most of this year. It has outperformed US markets. 7,700 has been a real problem for the FTSE going back to 2019. You know, so when we were looking at this over recent weeks, if there was an area to go short, the FTSE was up here. The market has fallen away. Let's see what happens. Not too much interest for me in the FTSE. Japan, the 225, the Nikkei. This is another interesting one. A bit like the DAX, actually. Arguably, this is even more interesting than the DAX. We're back on. If we flip this over to an hourly chart, what does it look like? If we go back to those lows, maybe 4 hours will make it a bit clearer. We'll have a bit less grid lines. Hold on. There we go. So we go back to those lows in October. Actually, if there was an index I had to do a trade on now, the Nikkei would be the tempting one. So the Nikkei, where's the Nikkei now? 27.4. Obviously the market's shut, although it is a 24-hour market. Normal hours are over. I think it's an interesting market to watch next week. So if I was a buyer now of the Nikkei, I would put my stop the other side of 27,000 on the basis that we're still in this uptrend that started in October. So we're 2.5 months into this uptrend. Market's been knocked back. Are we going to see the low 27s bring the buyers back out again? So that is an interesting market on a shorter term time frame over the last few months. Let's see. Let's see what happens. So DAX and Nikkei, perhaps the more interesting markets to watch next week when it comes to stock markets. But yeah, some real pressure on the US indices this week. Let's take a look at the dollar index. So I said at the beginning, I'm short the dollar index at the moment. And I'm short for a few reasons. If you've been on the course, you will know why I'm short. But you know, the big trend, or the medium-term trend, absolutely still down. Let's look at the short-term action in a minute. The big trend, arguably still up. You know, although as I said on Tuesday or Wednesday, whenever it was, you know what this market has done over the last 2.5 months has done a lot of damage to this big trend. But if you wanted to come up with a bullish argument for the dollar index, the big trend since May 2021 is absolutely still up. So it's going to be an interesting start to 2023, I think, for the dollar index. But this has been, you can see it clearly here. This has been absolutely the biggest pullback against this trend we have seen since this trend has been in place. So interesting down here to see in the new year, after this correction, where are we trading now? 104.5. It had been 115. So the market's dropped back 10% in the last few months. The dollar is 10% enough of a shakeout for it to resume that bigger trend? We'll see what happens next year. But lots of volatility for the dollar index. You know, a really good move. There's the interest rate decision. No, actually, where is the interest rate decision? Here. Here's the interest rate decision here. Some weird moves, actually, I thought, for the dollar on the interest rate decision. So there's the decision there on Wednesday night. Spikes higher, decides it doesn't like it, pushes a bit lower into Wednesday, and then Thursday has really strong rally on Thursday, and then tried to rally a bit today, and I went short about 104.60 today. So I think, for me, this trend, if we looked over the last, whatever that is, 3 weeks, that trend is still down. So I'm going short because I think the dollar will come under some pressure next week. But I think it is going to be, you know, this year, 2022, has definitely been, up until the last couple of months, the US dollar's year. You know, we've seen it benefit from uncertainty following the Russian invasion of Ukraine. We've seen it benefit from economic uncertainty. We've seen it benefit from trying to be an inflation hedge and what the US have done with interest rates. So it absolutely has been a stonking year for the US dollar. It started this year at 96 and it traded as high as 115. So it moved 20. What's that? 20% move at its peak for the US dollar this year from where it started 2022. So what's going to happen next year? But as if you've watched any of these things I've done in the past, I'm a big fan of looking at the dollar index. But for now, I'm sure. Let's see if it's under some pressure next week. Next year will be really interesting. Let's take a look at euro US dollar. I'm bullish on this market. You know, I've been saying it for a few weeks now. I'm waiting for a half decent dip. I'm not getting a half decent dip. Being short the dollar index is a reasonable proxy for being long euro dollar because the euro makes up a reasonable chunk of that dollar index basket. So short dollar index, long euro, similar sort of trade, but not the same trade. But for me, you know, just yesterday, okay, we ended up having a red candle in the end yesterday, but the euro did punch to its best levels since June of this year. So 6-month highs yesterday for euro against the dollar. Same thing for me. I'd really like to see a half decent sell-off in the euro against the dollar. You know, if we get back to 103, see what happens down there. But I do think really euro dollar and dollar index, really interesting markets in 2023. I do not think we are going to see sideways markets for these in 2023. But that downtrend has been well and truly destroyed, I would say, over the last 5 or 6 weeks or so. So an interesting 2023. Pound against the dollar, a little bit different. I'm not quite sure why I've got so many weird lines on there, but let's get rid of those. I think that has broken its downtrend. It's a bit, I mean, it's pretty volatile. Big move down yesterday on the pound. You know, I was expecting the thing to run out of steam at 123. It hasn't. It has managed to trade through 123 so far convincingly, only for a couple of days. But I think if you crave some action at the moment, the pound I think is an interesting market. So for me, I wouldn't be a buyer today, pound against the dollar. But if we saw it stabilise today and not slip any lower today, there we go. We've seen it spike as low as 121.20 this morning. I think it might be an interesting trade next week because 121 was a bit of support just over a week ago. Perhaps we'll see a bit of a pound recovery next week, which ties in with my short US dollar position anyway at the moment. If the dollar weakens a bit further from here, we'd expect the pound to bounce back. So I think we're going to see a lot of movements, famous last words, in FX markets in the first 3 months of 2023. But yeah, that recovery off that 103 level is still going for me and looks something like that. So I would be looking to be a buyer of dips for pound against the dollar at the moment. Let's see what happens next week. Let's look at oil, because I know we talked a bit about this on Wednesday. It's really interesting moves in oil. When we were looking at this on Wednesday, there was somebody who'd gone short, which has ended up being a good trade. I don't know if they're still in the trade because the market did move a bit higher after the Wednesday session. But we had seen, we'd had a good few days for oil. It had gone from a week ago, a low a week ago of $70, and was trading at 77 on Wednesday. 10% move in about 3 days or so. But it doesn't change the big trend. The big trend for oil is still down. And then the last couple of days, we've seen the oil price turn around again. So I think this is going to be another interesting market to watch next week. Are we going to see oil break below 70 next week? For me, that trend is still down. Like I was saying on Wednesday, we've seen it get hit quite hard over the last couple of days. If I was looking at a target now, I'd be targeting maybe 64, the low $64 a barrel. So the lows from early December of 2021. Yeah, so a year ago. But yeah, that trend ran out of steam. If we take a look on the hourlies, I think it was quite a quick turnaround? No, it took its time, didn't it? It was quite deceptive actually, because on Thursday, just yesterday, it did manage to push to a new, just about, very briefly, a new high for the recovery. And it's really, I've not been following the news, it's really turned around today. We ended yesterday about $76.30, and here we are, $2.50 lower. So interesting. I suppose if you are looking at it from a shorter term point of view, for me, the trade to watch next week, where does it stop going down? In the short term, is it going to have another run next week back up to 78? That would be an interesting trade to watch. For me, there's probably no trade at the moment in crude oil for me, but I would say that big trend is still down until we see 84 broken, which is $10 higher than where we are now. That big trend in oil absolutely still down for me. Natural gas, crazy. Look at this. I mean, natural gas is. I sort of do love it because it is so nuts. I haven't traded it for a while. I mean, look at this. We have had a week of sideways in natural gas, but sideways in natural gas means it swings around 10% a day. It's a major energy market. It'd be like oil swinging around $7 a day and going nowhere. This is what we have in natural gas. So for me, who knows? I mean, the trend, I keep going back to this trend that's been in place for 2.5 years or 2 years and 5 months in natural gas. The big trend is still up in natural gas. It's been an absolutely, crazy year. We all know because of the Russian invasion and Europe trying to turn away from Russian natural gas and just the crazy volatility we've seen in this market. I don't think we'll see that sort of anywhere near that sort of volatility next year. For me on natural gas, I'd be a buyer of weakness still. $5 has been a good floor for US natural gas. That would be the trade for me. With it trading here, there's nothing around $6.40. There's not a lot for me. It's an interesting market to watch, but it gets more interesting if it drops about $1 from where we are now. So not a lot for me in natural gas, but an interesting year next year. And hopefully the fact that we are well off the peaks for natural gas means that we'll hopefully start filtering through to domestic energy costs next year and start to ease some of the inflation that we've seen. Let's see what happens. So that's natural gas. Let's take a look at gold and silver. Now, with this volatility in the price of the dollar, with the dollar strength up until yesterday, we've seen the price of gold not back. I would be a buyer of gold. I think for me, the only question is, where's your stop loss going to go? So if you look at the trend since the highs this year, so the highs in March on the, Russian invasion of Ukraine, did not quite take out the highs from the summer of 2020. Okay, they got close, so they didn't take them out. Then we had that downtrend. I think the moves we've seen through November have changed that downtrend. That downtrend is over. So for me, I'm a buyer of a dip. The only question is, where's your stop going to go? If I was looking at this on the daily chart and I was a buyer today at 1789, the closest I'd have my stop would probably be 1720 if I was looking on a daily chart. If I was looking on an hourly chart, I suppose an aggressive stop, if you were a buyer now, would be underneath the 5th of December lows at 1765. So that's an interesting market. Again, it's all dollar related. So again, I don't pay that much attention to gold because if I'm short the dollar, then gold's probably going to go up anyway. But I think it's interesting. I think we've seen quite a bit of volatility in gold. Got knocked back about $50 from Tuesday's high. Perhaps next week we'll see it have another go at 1825 up at that sort of level. Let's see what happens. But I think next year could be an interesting year for gold, particularly if we see the dollar sell off more. Silver. I hate silver. I have been profitable this year trading silver. I think I've only traded it about 3 times this year though. But it is a market that seems to wrong foot my approach to trading. But it's interesting where it is now. It's been knocked back from 24 to near 22.50. If we flip this over to an hourly, it might make more sense. And we're sort of bang on that trend, which goes back to 3rd of November. So it's a 5-week trend. Would I buy it now? I wouldn't buy it now. I'd wait to see what happens on Monday. Do we get a bit of a wiggle back to 22.80 on Monday? The risk is I miss it. But it is for now holding on to that trend, that recovery trend that's been in place since the 3rd of November. So let's see what happens. But again, if the story, at least in the beginning of 2023, is going to be for a weaker dollar, then that should help lift silver as well. So, but continuing that recovery, you can see it there on the chart. So we've done gold, silver, we've done the energies. I mentioned bonds on when was it? On Wednesday. The only trade I'm looking at this afternoon, and actually it still doesn't look like it's going to happen, is in US Treasuries. I mean, I think I said on Wednesday, if there are other markets that you're looking to trade and you don't look at bonds, I think not many. There are some retail brokers who don't cover the bond markets. There aren't very many retail brokers who talk about it, and not many retail clients trade bond markets. But bond markets are the same as any other market, and from a professional trading point of view, they are heavily traded. So for me, T-bonds is an interesting market this afternoon. US Treasuries. The market has had this great run since the 8th of November. It did make a new high briefly yesterday, and it's tanked. It's gone from 132.16 down to wherever we are now, 130 and a bit. I think I bought them early this week. I talked about it on Wednesday. Came out of it on I think I was in and out the same day. But anyway, I wonder for me, is there a buying opportunity in T-bonds? So that will be one market I'll be watching this afternoon. But based on what it's doing at the moment, I don't think there'll be a trade lining up this afternoon. But you never know. So as a quick recap, what's interesting to watch? Well, for stock markets, the DAX, I think, going into next week, the DAX is an interesting one. We've broken out this downtrend. I've been waiting for it to pick up a bit of volatility and have a sell-off. We are having a sell-off at the moment. The question is, where does the sell-off end? So I think that's a really interesting market to watch next week. I'll be watching the US stock markets anyway, but for me, even if we get a good rally today, it looks like a selling opportunity. The dollar index is as I've said before, really a real favourite of mine. You know, I'm short at the moment. The interesting trade for me on the dollar index is, does it crumble back to where it was earlier this week after the excitement of the interest rate decision? Let's see what happens. And euro US dollar, which is basically the same as the dollar index anyway, because it continues its recovery. And oil, from a shorter term trading point of view, it's been heavily hit the last couple of days. Do we see a bit of strength come back? So lots to watch, even though we're only a week and a bit away from Christmas. Plenty to watch, I think, going into next week in these various markets. So let's quick plug for the course. Go to the website, jonesthemarkets.com. Any questions, drop me an email. If you use the code YouTube, you get 20% off. That's valid until the end of the year. Even though this is probably the last live stream for 2022, I will upload a video on some sort of trading education thing in between Christmas and New Year, just in case you're getting bored of talking to your family. I'll put something up then. So if you're not subscribed to the channel, if you subscribe, you'll get that. But let's have a quick look at some of the questions. What type of license should I consider when choosing a broker? If you're talking about regulation, which I guess you're talking about, for me, I live in the UK, so for me, I always want to have a UK regulated broker. There are lots of brokers out there, lots and lots of brokers out there, and a lot of them have UK regulation. Some brokers are regulated by some obscure to me, territories. Personally, I wouldn't trade with them. So I don't think there's an enormous amount to choose between brokers. As long as you're getting good spreads, you've got the markets to trade you want, and you can trade the size you want, however small or however big that is, there's not an awful lot. It's a bit like buying just a normal, everyday, boring car. There's a lot of normal, everyday, boring cars out there, and they're all as good as each other. Yeah, and I think with brokers, as long as the regulation's okay, they're all pretty much as good as each other. So the first thing I would look at is the regulation angle. So I wouldn't want to be regulated by a broker who was, regulated in the Polynesian islands or something. Yeah, so for me, that is a concern. Just in case there's a dispute or they go under, I want to know that there's a half-decent regulator standing behind them. Are we getting too close to Christmas to play big positions in the market? Mighty better to wait for January. Yeah, I think it is a funny time of year. For me, I'll still be looking seriously Monday and Tuesday next week, and then probably no more trades. And if there are no trades on Monday, Tuesday, then I won't be doing any more trades this year. But for me, I'll carry on till then. But I think, the second half of the week, maybe it starts getting a bit odd. But you do I can remember, some of the moves we've seen a few years ago between Christmas and New Year, get some really wild moves. Again, of course, it's thin liquidity and all of that. I think a few years ago, there were some crazy moves in some of the FX markets between Christmas and New Year. Whether or not you want to trade those is up to you. But for me, from Wednesday of next week, I don't think I'll be doing anything new trading-wise until January. If I have £500 total invested, is £100 on margins too high? I don't understand the question there, if I'm perfectly honest with you. So if what you're trying to say, if I've got a £500 account, is risking losing £100 too much? Absolutely it is what I would say there. If I had a £500 account, if any trade goes wrong, I do not want to be losing more than 2.5% of my account balance. Yeah, so that's about £12.50. Is that £12.50, isn't it? Doing the maths quickly in my head. So on any trade I did, I'd only risk losing £12.50. That doesn't mean I'm only going to buy or sell £12.50's worth of stuff, but it does mean if I had a 10% stop on something, if it goes wrong, it's only going to cost me £12.50. And people hate hearing this because everybody wants to hear, well, not everybody, but people want to hear, with a £500 account, yeah, you should take massive levels of risk. And of course you can if you want to, but the chances are you'll end up like 75% of people and be a loser. So for me, if that was the question, if I had a £500 account, I would have exactly the same approach to risk management that I've shown with the £4,000 account that I show on here, where I only risk losing £100. If I had a £500 account, my risk again would be about £12.50 a trade, just so you know. Yeah, and people cannot do risk management when it comes to trading. It's a big reason people lose. It will never change. You know, whoever's doing YouTube live streams in 100 years, if they know what they're talking about, they'll be saying exactly the same thing. Risk management for a lot of people, for most people, is the big reason why people lose money trading, and it'll never change. Does your platform have live cattle? Live cattle is at 7-year highs. Ha! That's one in the eye for all the vegans, isn't it? But maybe that's why live cattle's going up, because nobody's eating beef anymore. So it's becoming a bit of a scarce commodity. I've got absolutely no idea what I'm talking about, have I? That's live cattle futures. Let's see. Can I get a cash market anywhere? Live cattle futures. All right, let's just look at the futures. 7-year highs, you say? Well, who'd have thunk it? Wow. Oh, what a trend. What a trend. So since 2020, live cattle was 84. No idea what that is. $84. Let's say $84 a cow. Let's do that. And here we are at 155. So it's almost doubled the live cattle price in 2.5 years. I'd be a buyer, wouldn't I? It's an interesting market, that, isn't it? Though I'd be a buyer as usual. The only question is, where does your stop go? It looks like it's quite a nice breakout trade, that, actually, because if we look at it back here, October hits the high, backs off a bit, tries to break out in November, ends up being a false break, and here we are again. So I would be inclined to treat the live cattle breakout as a valid one at the moment. So if I was a buyer at 154 a cow, I put my stop the other side of 151. Let's add that in. That's an interesting market to watch, the old live cattle. Let's come back to that and see what it looks like. But yeah, nice one. Well done, Nick. You always good with interesting markets. But that is a heck of a run, isn't it? Since April. Since then. It really got a move on, didn't it, over the last 2.5 years? Right. Short Coca-Cola. Let's have a look. Coca-Cola. KO, I think, is the number, is the code. Short Coke. Yeah. Short Coke. Yeah. I mean, it was good. I think we looked at this before. Did I say to go short here before? I'm sure I did, because I've drawn the trend line on it. So I think that would have been a short. I would maybe wait for a rally. Does it move back up to maybe 64 and go short? But absolutely, it does look like it's running out of steam, doesn't it? If I was going to go short now, at wherever it is now, 63, the closest I'd have my stop would probably be the other side of 65. So it's had a great run up again, off the October lows, but, you know, has historically struggled up here in the past. So it looks like perhaps an interesting short up there. The next Fed meeting is Feb the 23rd. Okay, they'll raise a quarter point. So that's going to Phil and see how it all plays out. Yeah, they were really, I think, again, it was the press conference and the statement, wasn't it, that really spooked markets. I did read it on Thursday and I've completely forgotten what I've read, but I think Powell was saying that they are clearly they're not having enough of an impact on inflation or something. Let's see. Daniel made a couple of quid on the Nasdaq trade. Well done. Everyone's on a little chat in the comments. Yamana Gold, AUY, Yamana Gold. I mean, to me, it looks a little bit boring. I would be, if I had to do a trade today, I'd be a buyer, even though it's had a little wibble below the support. So I would do, it's a bit messy and gappy, isn't it, for me? But for me, I could be tempted to give it one last chance of continuing this uptrend, I should say, sorry. Yamana Gold. Let's draw the thing in. So even though it's sort of fallen out, it did push to a high there. So let's plonk the trend line there. Even though it's fallen out that downtrend, I'd take the view, has the market overreacted? Be a buyer and put a stop under $5.25 and see what happens. See, does it have another run at $5.75? Like I often say, I don't trade stocks, but for me, that's what I would do. And if it didn't, then I think the risk is this trend is well and truly over. Can we have Deere? John Deere, the old tractor company, isn't it? Got a very agricultural feel to today's session. Now, it's interesting that, isn't it, John Deere? I'd go short now, John Deere, on that one. I would say it's been a bit of a swingy old year, isn't it? We've seen it really swing around. So ended last year. Where did it end last year? $342, ran up to 446, down 290, back up. Again, it's a bit of a TARDIS trade. Would have been good to go short a week ago. But for me, I'd be tempted to go short and say, look, it's running out of steam. Stop above 450, and if it broke 450, be a buyer. That's what I would do because it's a breakout. So for me, I'd again rather wait for a rally, a bit like the Coke trade. But yeah, I just think it's been something of a line in the sand, hasn't it? That $450 price per stock price. Let's see. Curate Retail Group. God, you do find some weird and wonderful things. Curate Retail Group. Is this the one? Well, I mean, what do you? I mean, look at What now? What do you reckon? Even if you're new to trading, can you take a wild stab in the dark at what the trend on Curate Retail Group would be? I'll give you a little bit of time. Oh, what's that? I've drawn the wrong line in. For me, it's a downtrend. So for me, absolutely sell a rally. For me, on Curate, sell a rally. Phil agrees with me. Very good, Phil. Always good to see that. What do you think about Euro Sterling and Aussie dollar? Let's have a look. Euro Sterling had a big move, didn't it, in the short term, because it's a funny old market though, Euro Sterling. It's all a bit scrappy, isn't it? But on the hourlies, I would sell it because it seems to have these runs. It's not a trade I would actually do with real money, but I would, if I had to do a trade on it, I would sell it and put a stop above 87.80. Euro Sterling, one of these markets, goes nowhere for ages, just chops around. Then you get an explosive move. So I would be tempted to go against the explosive move in Euro Sterling. Aussie dollar, I nearly bought that. I nearly bought that this week on Tuesday, but I didn't do it. And it did have a big run up on Tuesday on that inflation. And then it's absolutely tanked since then, isn't it? For me, this is a trade for next week, and I would be a buyer. That's what I would do. I'd be a buyer of the Australian dollar. So I would take the view that, even over the last, since 6 o'clock last night, we have seen a bit of stability come in at 66.60. Yeah. So for me, it's an interesting trade, but perhaps one for Monday to see what happens. I think if you have a look on the dailies, I'm sure it's going to be just as clear on the dailies. Here we go. So, yeah. So, is it going to have another run at 69? I think would be my question. And I would say, okay, let's give it a chance to have another run at 69 and put a stop under 66. That's what I do. But so much of it hinges, obviously, on the dollar continuing to be weak. When do you trade after a big announcement like the way we had with the US on Wednesday? Good question. I think I said on Wednesday's session, so we did Wednesday's live stream at whatever time it was, 12:30 in the afternoon. And I said I wouldn't trade until the decision came out on Wednesday night. And for me, I haven't actually traded since then. I'd normally wait till the next day or something like payrolls. Maybe later, much later in the day. I have done trades on payrolls days about sort of 7, 8 o'clock on the Friday with, fully intending to hold over the weekend and see what happens next week. But I think again, the big mistake so many of us make is feeling we need to be, we get sucked in by the volatility. So for me, I absolutely want to see the dust settle. So I'd happily wait 12, 24 hours after a big announcement before doing a trade. Like I said, the only thing I'm looking at this afternoon is that T-bond trade. Maybe there's a trade there for me later today, but I won't do it till 5 o'clock. I'm looking to be a buyer of treasury bonds, but the way it's performing at the moment, it's not showing any signs of stopping going down. So, I think patience is a really important one. So I'm quite happy to wait lots of hours after an announcement to do a trade. My literal win rate on silver is -%. I had that in natural gas it was in 2020 when I used to do the videos for the broker. Every trade I did on natural gas nearly every trade in 2020. I was the wrong side of it, you know, and it's because it was going down, then it would rally. It was a really weird time, and there are some markets that for whatever reason you just get out of sync with, and I think don't fight it. Go and trade something else, and if silver's that market for you, absolutely go and trade something else. David, what do you think? Sorry, I've just lost your space. What do you think of putting too much hope and basing many trades on one aspect while trading, for example, the dollar's strength or weakness? Right, hope should absolutely not play any part in your trading, because I think there's a couple of reasons for this, right? I mean, hope, I'm not saying you're stupid, but trading on hope is stupid, isn't it? Because it's just a gamble, okay? But the bigger problem, if people trade on hope, and I know plenty of people do, they hope that Bitcoin goes back to 50,000. They hope that Tesla goes back to wherever it goes to. You can't measure it, can you? You know, I've got 4 different setups I trade on the hourly charts that I talk about in the trading course. And because I know what those 4 setups are, it's really easy for me to measure the success or otherwise of those setups. So I know I'm looking for this in one, I'm looking for that, I'm looking for something else. If you're trading off hope or you're trading off gambling, you can't measure that, can you? Because sometimes you might get lucky, most of the time you won't do. So it's very difficult, I think, to build a trading strategy based off hope. So even though I am bearish on the US dollar, there are really good reasons based on my strategy why I'm bearish the US dollar, and it's just chopping around at the moment. It's not doing anything, you know, and there's an absolute stop level in place. So for me, you know, one of the biggest changes to my trading was keeping decent records, and I talked about that on the live webinar I did on my trading course a few weeks ago. You know, if you're not you've got to treat trading, I think, like a business. Yeah, so that involves not trading on hope. So I hope that answers the question. You know, so for me, there are definite. So even though I'm short the US dollar, if I get stopped out of that trade and it looks different on Monday, I'll have no hesitation going long the US dollar. Yeah, so I don't care, and I think you've got to have an open mind and a strategy, and document your approach so you can see where you're going wrong. And of course, for most people, that's too much effort. And that's another reason why most people lose all the time. China A50. Let's have a look. I think I've got that saved in my little watch list. So I think we saved this because I would go short. I think I said this when we last looked at it. It hasn't moved a lot in the last month, the China A50. But we do have this downtrend for 18 months now. Absolutely short central for me. So go short wherever we're trading now, 13,100. The closest I'd have my stop is 13.6. Interesting market, hasn't done much over the last month. But that for me would be the trade in the China A50. Is it open now? It doesn't seem, is it a 24-hour market? Oh yeah, it is open now, it's just not moving a lot. There we go. Capital One Financial. Capital One Financial. So stock again. Let's have a look at that. Absolutely short for me. You know, the trend is down on that, isn't it? Hang on, let's just, you know, it's pretty, again, you know, the trend is like that. It is on the cusp, isn't it? If you absolutely had to buy it today for some reason, right? Let's say someone had a gun to your head and made you buy it. I'd be a buyer, but I'd have a stop loss the other side of 90. You know, I think the risk is if it breaks 90, it's going to sell off. I mean, like I often say, I don't trade stocks, but I look at them exactly the same way I look at anything else. Massively volatile over the last couple of months or so. Gone from 90 to 120 and back again. But the trend is down, isn't it? The other reason that people lose is we can't trade with trends. You know, this is another reason that we all look at a stock like that and think, well, how much lower can it go? You know, if it's trading at 135 and it's been 180, how much lower can it go? Answer, a lot lower. And it can go a lot lower than 90, of course. Let's see what happens. But interesting, if it breaks 90, personally, I'd expect the trap door to open again. But let's see what happens. But if I absolutely had to buy it now, going against everything the market has done over the last year or so, I would put a stop the other side of 90. Let's see. 500 an account and a... Okay, hang on. So going back to this 500 and 100 question. 500 on account and 100 in maintenance margin. Oh, no. I think no. I think that's fine. So you've got a 500 quid account and you've got 100 quid tied up in margin. I think that's perfectly sensible. You know, for me, when my margin goes above 70% of my account balance, which it doesn't do very often, then I think, oh, perhaps I'm trading too many markets here. So yeah, for me, that split sounds perfectly sensible. Right, let's see, what else have we got? Are trading bots worth looking into? I doubt it very much. I'd love to be able to automate some of the stuff I do, but I think there's still an element of subjectivity with the stuff I do. I'd be very skeptical of anybody claiming a trading bot is going to sit there and just print money out of your brokerage account for you. Cotton. Let's have a look at cotton. I haven't looked at that for a while. Cotton. I've said it in the past. It had been a great market for me in this uptrend, and it just sort of went crazy into May of this year. It's gone crazy the other way since then. For me, that trend is still down in cotton. You know, I suppose if for whatever reason you thought I want to be a buyer of cotton, the closest I'd have my stop, the other side of the late October low at 72. For me, there's not much to me that appeals about that market at the moment. Let's see. So the trend is still down. You know, I can't see cotton soaring above 100 anytime soon, personally. And it's been a great market in the past in terms of the trend. So yeah. Any views on Exxon? So Exxon Mobil, the old oil giant. So look at those. I would be a buyer. It's interesting, Exxon, actually. It shows you the frustration, I think, of perhaps trading with the trend. You know, if we pick up on Exxon, if you take the trend off the, what's that, November 2020 low. So we're 2 years into this trend. So for me, looking at that, trend is up, blah, 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 be a buyer. And then we had the break there, wherever that was. So be a buyer there, 24th of October, the break. The market breaks out. So if we were looking at this here, that absolutely looks like a perfectly valid breakout to me. And then the thing has gone all the way back and is faffing around the breakup line. But actually, I think this is an interesting opportunity. Because if we look at what we've got here, we've got the 2-year trend is up since October 2020. We've got the stock is here. I'm guessing that is all-time highs for Exxon. Hit all-time highs in November. The market has just come off a bit from all-time highs. So for me, that is a buy. The closest I would want my stop loss, the other side of 102. To give it a bit more wiggle room, I'd probably go 95. So for me, ExxonMobil, I would be a buyer. Clearly, do not follow my advice. You've got to make up your own minds. But for me, I'd be a buyer with a stop at 94. Interesting. Let's come back to it. We'll add that one in to the old list of things to come back to. Let's see what it looks like. What else have we got? We looked at natural gas, and I think that's it. Actually, we're done, and it's nearly time. It's 3:25, so we're nearly done. So I'm gonna wrap things up there. So there's still, even though it's that time of year, there's a lot to watch. So I am short the dollar index. I think I'm about 5 points in profit at the moment. It's not done much today. The trade I'm looking at later on for me is T-bonds. Do we see a bit of stability come into this market? Let's see what happens. Stock markets. Oh, look at that. Stock market S&P's turned round since 3 o'clock today. Are we going to see it move to new lows again for this down move? I think the DAX is an interesting market to watch next week to see where this sell-off stops. Let's see what happens there. and oil as well, just to see on the shorter term chart, do we see it start to build a base? Maybe a bit early to say that yet. So lots to watch though, but we'll come back to it. We'll come back to it in the new year now, won't I? So I will put a video up in between Christmas and New Year with some trading tips, some strategy stuff. Buy my course. It is objectively the best trading course out there because I actually trade it and I show you the trades, and I don't sell a dream of trebling your account in 3.5 days. If you buy it before the end of the year, you can use the code YouTube for 20% off. jonesthemarkets.com has the details. I'll be putting some more stuff on my website over the next few weeks, building out some stuff there. I was focused in the last few months on getting the short-term course up there, but there's more details if you go to the website. Any questions, drop me an email. Thanks for the support this year and joining the channel and subscribing to it, all of that. Hopefully continue to grow it in the new year. Have a good time over the next couple of weeks. Good luck with your trading. Don't blow your account up over Christmas because you're bored. And see you all in January. And we'll do it all again and we'll see what 2023 looks like. Okay, thanks very much.